Alright, well, good morning. We're running a little bit behind today. That's alright, it's Friday. Just wanted to do just a real quickie, anyways. Follow up on some things that we talked about last night. Um, it turned out, looking here at Aussie dollar, I draw this downsloping channel by default a lot of times when I expect that things have changed when we took out these two swings. Because I'm looking for the possibility of where I might want to sell a retrace, and sure enough, if we held here, I was more interested in not selling the tiny little coil for a big meltdown, but maybe selling up here. But again, we were talking about, hey, that's going to be a Friday type trade. Things tend to coil and mess around. So, and sure enough, even though this was a nice entry, we found support midway in the channel. And now, maybe if this was some other day, I would consider a trade here with a stop here. It's about 20 pips. But just not going to do it on Friday. Let's take a look again at the daily. We're still playing with this same area, kind of coiling around this 382 that's been stalling us out for the past 2 days. And what's also interesting, if we come back to the chart, my messy chart, that's got all my lines and frequencies on it, this double bottom looking thing, it mounts off this persistent frequency that I've had. And when we came up and we stalled, and this was a 618 retracement of this leg down, also we once again touched this frequency from the other side and stalled out. So lots of kind of sideways actions, lots of, even though we printed these two biggish bare bars, something that we hadn't seen really much in this whole uptrend. We're really not cracking down yet by any means. A lot of this is going to be position squaring. People are here buying it. It's a really big confluence agreement area, and by that I mean we got a 382 retracement of the last leg up, which is this whole big thing here. It's also ABC 1-to-1. It's also the 4-hour moving average and my frequency. So just everything coming in there. If I was up late last night and I was looking at this area for a buy because I did kind of like the way it kind of wicked out, and I like the frequency and all this conjunction of other things that gives other traders reasons to get in and get busy buying. But again, I was tired. No reason to push it. If you had taken the trade, if it had happened at a nicer time of day, you could get in at, probably wouldn't be able to catch this down here, but if you got in at something like 68, put your stop under the double bottom looking things, risk about 15 pips. Technically you'd really want to be under here, but I think I'd play it cheap once I saw this test on this frequency, because if that breaks, then I'd really be expecting it to go down here and take out some more stops anyway. So because if we go through this line, I expect it to get to the next line down. So that's it. If you had, I don't know that you really want to take this trade. The risk reward is actually pretty decent. You're risking around 13 pips, and even if you were just going to take it off into this 618 area of confluence with all these with all the frequency going on, that's still 40, 50, 60 pips. No, not 60. About 70. Yeah, 50 pips. Not terrible. Probably about all you'd want to look for, considering the time of day and getting in closer to a weekend. When the stop is small enough, then you can play for 50 pips. If the stop isn't small enough, then you end up in the... Even if you're playing for 50 pips, you're really ending up in the kind of strange world of scalping where you need to be right almost every time in order to make any money, because if you're going to risk 40 pips to make 50, then you got to be right almost as much as you're wrong. Alright, what else is going on here? Here's our 24-hour chart of the E-mini S&P. Coiled overnight, broke down, retesting our big range on the 24-hour chart. If we look at day only, we gap down, and here we are. During the day, we tested the backside of some lows, and this 382, this is actually a busted Fibonacci level, which we talked about in the Fibonacci video. What happens if price slices through it? Well, then we expect the guys that had their hands out right here to take an opportunity to get out at break even, and that's what they did. And so far now, it's coming back down. I'd be surprised if we found any support before this 1-to-1. In fact, I mean, really, this thing looks like it's gonna start working its way down over the next days and weeks, now that we've had this big expanding pivot that failed to make a new higher high and is broken down out of the pattern. Alright, what else? What's going on with the yen? Pretty much just going to have to hold on through these wicks and coils during the weekend. I don't have any problem with the way it's trading. Just have to wait and see. Canada, yeah, see, this is why I wanted to wait. If you had tried to sell that with a little microscopic stop, then you'd be there in an area where there are more stops than limit orders, and that's really not a great place to be. How do we know there are more stops than limit orders? Well, we don't. Until we get this bar, then we knew that everybody was running for the hills. Now, our stop is still up here, but I don't have anything that shows me how to get in here. Maybe if I took some time and drew long enough. I still think that if we did come down and make a lower low, and we can use this as a stop, and we use this as an entry, then that would be most excellent. That would be let's see, getting in at 24. Yeah, well, that's still pretty big actually. That's yeah, it's quite a few pips. Yeah, well, it's gonna have to build us something nice in order for us to take advantage of this thing, but we'll keep an eye on it. Alright. Let's take a look at a few sectors here. Banks breaking down again, retracing to test this downsloping frequency that's been working pretty well. And where's support? Well, it's down here at these lows. And I've got some old drawings in here that really need to be cleaned up. Let's get rid of a lot of that. Yeah, really not much in the way of support till we get down here. We can look at some Fibonacci just to see. Here they found their support, smashed through this 1-to-1, came back inside of it, dumped it back up. And they sold it at 382. Now if we measure this ABC leg, another 1-to-1, found some buyers there, enough to send it back up to this other Fibonacci level that was smashed, and also our frequency. but the direction is down. Also, I like to see how structure like this is a gap pivot line, tends to come back into play over and over again. And right here, we hit it from both sides. So let's keep that on the chart. I think that looks good. We also have the same thing going on here, which also corresponds to our 1-to-1 Fibonacci. NASDAQ, about as ugly as everything else. It seems to be obeying the frequency, or at least giving this down-sloping median seems to be giving good areas for the limitation of the run, max excursion. And the Russell 2000, yeah, same story. Everything's pretty much in agreement that he wants to go down. So, we definitely don't want to be standing in front of that train until we find some kind of support or indication that things aren't going just straight down. And it looks like, well, let's clean this up too. Now, we haven't done any overall damage on the daily chart on the Russell. So what's going to be interesting is if we take out this multi-pivot line that has these lows in it, and if we do, then we may be looking at some more significant correction, maybe even the beginning of some kind of downtrend. Because if you pay attention to this, we haven't seen anything kind of to give us any pause or worry in years. Just marking out our swing highs and swing lows. Nice stair step up. No, nothing tricky. Don't anticipate when this thing is going to stop. And it really wasn't until the beginning of the year in early February that we had our first warning sign that something different might be going on. We made it up to make a new high after that, but maybe this is a start of a daily expanding pivot. Let's take a look at that. Could be. We'll see. It's definitely sell and may go away seasonal thinking, so there's a little bit of that going on as well. If you don't know, definitely the worst part of the year for the stock market is historically has been from May until September or October, when most bottoms are typically found. Okay, I think that'll do it for Friday. We'll wrap it up there, and we'll think about over the weekend what I want to do for a lesson, some kind of chart show, teaching specifically one technique. Make another nice video to have for the record. But that's it for now. Have a good weekend.